Peter Bofinger has been a member of the government-appointed panel of economic advisors, often referred to as the Five Wise Men, since 2004. And he joins us on the phone from Hamburg. Mr. Bofinger, thank you so much for joining us. In terms of what the European politicians can do, and especially the meeting between Nicolas Sarkozy and Angela Merkel, are they there to do business because of the market rout and the huge roller coaster we saw in the markets last week?
Well, I think they definitively have to deliver something to the markets. The markets are very nervous because the crisis of confidence has now also affected the big players in Europe, Italy and Spain. And we can see that if a country is affected by this crisis of confidence, it leads to a vicious circle of ever rising interest rates and a reduced debt sustainability. And therefore, Merkel and Sarkozy have to do something against it. And I think they cannot end this day with empty hands. So I think they have to deliver something.
But
I'm
Mr.
not
Bofinger,
sure, but,
what exactly can they deliver? Some kind of a step towards issuing Eurobonds? I guess Angela Merkel's very scared of any kind of political backlash from back home.
Well, but on the other hand, there is no alternative. If you really ask what can make the situation stable again, what can restore confidence, the only thing that can do it is Eurobonds. The rescue mechanism, EFSF, is not sufficient. Its means are much too limited to support Italy, and therefore they have to go this way. There's no alternative, whether they like it or not, because if they do not support Italy, then either the ECB has to do all the support, which is problematic, or Italy risks a severe financial crisis, and such severe financial crisis would have implications for the stability of the financial system of the whole euro area. It would be a kind of Lehman Plus scenario. And therefore something has to be done.
And so do you think that we will get some kind of form of Eurobonds by the end of the year? And are we going to have the first step of Germany actually accepting working towards a common Eurobond today?
Well, I don't think that we will have Eurobonds by the end of this day, but I think they will show a commitment to go in this direction, because that's what definitively needed to calm markets.
How much would it cost Germany, though, financially and Merkel politically, to accept Eurobonds in the future?
Well, I think the financial costs for Germany are hugely exaggerated in the media. The interest rate of Eurobond would be in the neighborhood of the interest rate of U.S. Treasuries, because that's the only true alternative. And if you look at the overall fiscal data of the euro area, they are better than the U.S. data. There's no reason for a Eurobond to have higher interest rates than a U.S. bond, and it would be a very liquid market, the Eurobond market. Therefore, I don't think that for Germany it would mean would mean higher long-term interest rates than, let's say, 3 or 3-point-something%.
But in terms of the figure being branded about, we're hearing 47 billion, around the 47 billion mark per year. Is that way too much?
That's simply nonsense, because it assumes that the interest rate of the Eurobond would be a weighted average of the interest rates of the national bonds. But the high interest rates of some national bonds in the euro area reflect the risk premium that these countries can go bankrupt. But once you have Eurobonds, member countries individually can no longer go bankrupt, so the risk is simply evaporates, and therefore it's simply wrong to make this kind of calculation.
And Mr. Bofinger, you know, we just had, of course, those GDP figures, disappointing GDP figures for Germany earlier this morning. How much is that going to play into Angela Merkel's thinking when she meets Nicolas Sarkozy? Certainly, it will be much more difficult, again, politically at home for her to sell any money being put elsewhere than in her home country when GDP is falling.
Well, I think the GDP figures in Germany are a wake-up call that the heads of state of the euro area should not lose sight of the growth dynamics in the euro area. So far, the emphasis is only in how can countries save more, how can they consolidate more, and it's just a race to the bottom. Italy has to save, France has to save, but that's very dangerous under cyclical aspects, and I think the heads of state have to sit together and have to ask, what can we do that this consolidation, also it's necessary, is executed at a reasonable speed without suffocating growth in the euro area.
But actually, these GDP figures, do they indicate that this is just a blip, that growth growth will continue increasing in the coming quarters, or are we actually looking at a possible Germany recession, which was just unthinkable a couple of months ago?
Well, I do not think of a recession, but I think it's clear the overall picture is obvious. We had very high growth figures in Germany as a consequence of catch-up processes. In Germany, we had the steepest decline in 2009, and therefore our catch-up process was much more pronounced in other countries. But there was no reason to assume that this will continue. The average growth rate, the potential growth rate of Germany is about 1%, and I think in this direction we will be heading. And but given the weak situation in the euro area, in the United States, in Japan, in the UK, it could mean that for Germany the growth rates in the next few quarters is below potential growth, and therefore I do not expect that this is a temporary phenomenon that we have. It shows that we are now in a direction of much weaker growth than in the last few quarters.
Yeah, a bit more vulnerable. All right, Peter Bofinger, thank you so much for your time.